What's up, guys? Mr. Fit to Flourish, and today I wanted to talk about the Apple trade that we took in the Discord and why we took it, why I alerted it, and why I thought it was going to play out and how it played out literally exactly how we expected, and kind of even better because it was an options play. All right, so the first thing I'm going to do is I'm going to share my screen here and talk about what happened in the play and why we chose that play. All right, so the first thing I wanted to talk about is this is Apple. All right, Apple on the 2-hour time frame. I use the 2-hour time frame to analyze things. What was I looking at? Well, Apple was kind of consolidating here for quite a while. Where did we enter? We entered pretty much right around this 201 area. And if you look at the risk to reward, we were risking to this 199.09 key level. So it was basically that level is basically a psychological level. It's like the $200 level, and those levels are psychological, where it's like, oh, traders want to trade at increments of 5s and 10s. So, for example, if you have a dollar bill, like the dollar bills that are most popular are 5s, $10 bill, the $20 bill, the $50 bill. So at those 5 and 10 places, okay, those are where traders are typically satisfied when it comes to exchanges. So that's why that $200 level is considered psychological, but we consolidated there forever. So I was like, hey, we can get in pretty early, because I feel like this is gonna rip. We can get in pretty early, and if we close below this level, then we know we were wrong. Okay, on the 2-hour time frame, if we close below that, we know we're wrong. Let's get out of the trade. So we're risking this much to get this much of a potential gain, which is a 5-to-1 risk to reward ratio. Now, if we brought it down to our first key level, that's still really good. It's 2.68 risk to reward ratio, which is the first target. Our first target was, okay, we're going to go from 200 to 206. 66 is that key level. And then the next key level, which we also hit, is 212.07. Now, the next key level, if you guys want to get in this trade, it's going to go, it's 216.86, and then 221.41, and then 224.54. Okay. Ooh, whoops. All right. So anyways, I wanted to show that. So when did we get in? We got in here around the 201 level. That's also our point of control, our area of highest volume. Okay, so we should be able to hold this really well. And then, our options. What options did we get? The first day we got 210 strike, 718 expiration. So the July 18th expiration. Today is July 2nd. We got these on June 30th. And then on July 1st, our option contracts were up over 170%, and then they kept going like up 270%. I got out at about 160% for all my contracts. And then I wanted to re-enter. I re-entered because we held the next level, and then the next day we went up 300%. It was kind of crazy. I'm not gonna lie. All right, but let's explain a little bit more of what was going on and what I was looking at. Okay, because most people are gonna look at this and be like, oh, okay, you got in, cool, you made money, okay, cool, 150% options, cool. I want to kind of explain because this same setup actually happened with MU as well. I'm going to show that too. So this will be a little bit of a longer video. It's only 3 minutes. All right, so basically what happened? So Apple started to sell off here after making pretty big highs here. We came up to about the 212 level. Well, not highs, but we started selling off quite a bit because of all these rumors of slow sales, and we expected these AI integrated iPhones, and the sales were just horrible. So this was like all the AI run up that we kept seeing with Apple. We ran up all the way to 259, okay? And sales just weren't looking good. We were getting beat out by Huawei in China. That's kind of crazy. I remember I had a Huawei phone back in 2012, and that's an Android. Anyways, it was Apple is a big name, okay? Apple's a big name with their iPhones and everything, and yeah, just weren't doing too hot. So, and then we had this litigation start out. So we saw more of a massive push to the downside. So currently Apple is kind of oversold, all right? And we've been kind of holding this 190 level. So we know this 190 area is pretty strong. We bounced once, we bounced twice, huge demand here. This is our third bounce from that area. And then the next psychological level from 190 is this 200 level. So anyways, we were in this downtrend, all right? We were in this downtrend, and I saw that this downtrend was about to be broken. All right, it looked like it was about to be broken. We were consolidating, okay? And I talk about a consolidation breakout play. And this is something I talk about in our Discord, and then also in a ton of the videos I put out here and on TikTok. But basically, this was our range, okay? If we break below this, then Apple's cooked. But if we break above this, you want to enter on the close of that candle. Okay, so if you entered, even if you entered here, we entered pretty early, and this was like a demand zone play that we kind of played, because there was so little risk. If we close below this, then we know we're out. But we entered pretty early and got a huge gain. But really, you want to wait until we break out from this area of consolidation, which we did, and then you'll enter, and then you go long. So there were two breakout zones. Okay, there's two types of breakouts too. There are diagonal breakouts. So from this downtrend, we broke out from this downward trend line. That's one breakout. And then there's horizontal breakouts, which is this horizontal line here. Okay, this horizontal line here. Let me hide this here. We'll hide those EMAs so you can see this better. All right. So there's this horizontal line. So horizontal breakouts work better than diagonal breakouts. Diagonal breakouts, typically you'll get a breakout and then you come back down to retest it. And if we don't break out above a horizontal level, then it's not as strong. Horizontal breakouts typically cause stocks to go into what's called discovery mode, where it just starts to look for new highs. Okay. But anyways, yeah, we took this because one, we were consolidating and holding this level really well. So if we broke this level, then it'd be like, okay, then this is cooked. But we were holding really, really well, and this level looked extremely strong. Okay. And then the other thing that I noticed was the volume RSI started to spike. Okay. And our volume RSI is the relative strength index for how much volume is coming in. So that's telling me that people are taking interest into Apple. Another reason I wanted to get into this play is because, so let's kind of write down these reasons. Because this is how you collect evidence to get into trades. So we had a diagonal breakout. We had a horizontal level breakout, horizontal breakout. Come on, geez Louise. All right, and then we had a volume RSI spike. And then also on the 2-hour time frame, our pink line was above the yellow line, and we had that 920 crossover. Okay, we had the 920 crossover, which is an indication of a market structure shift, which just means we're going to be start to go up. We're going to start to go up. So we had a 920 cross. We held the POC, which is the point of control. So that was our our volume indicator, which I'm going to have to put back on. And I'll make a video on that, how to draw the what's it called, volume profiles. And what else? And then we horizontal breakout, held the point of control, and then we had good support at a major psychological level. And what else? The last thing that really you got to kind of think outside of the box was that June 30th is the end of the second quarter. So 6/30 was the end of the second quarter. So my thought process was like, okay, Apple is beat down pretty bad, and this is the end of a quarter. What happens at the end of a quarter? Well, we get what's called rebalancing from big institutions. So since Apple is so far down, institutions start to look at big names and stocks that have been beaten down, which we call laggards. Okay, big institutions start looking for laggards to get into, because then if we're down at 200 and we used to be at 259, then if we can get to 259, then that's almost a 30% increase in this stock that is possible by end of year. And just half of a year making 30% is crazy. If you want to beat the S&P goes about 11% on average over 10 years. Okay, so 30% is kind of crazy. So what big money starts to do is look for laggards. And I was like, yo, Apple's beat down pretty bad and has a lot of room. It's a pretty strong company. Okay, and they have over $100 billion in free cash. Come on. So this was an obvious play in my head. I was like, yo, they're going to start big money's going to start picking up Apple. They're going to start dumping some of their winners like Nvidia. They're going to start dumping some of the S&P. They're going to start dumping ARM, some of these other companies that just went kind of forever, PLTR, they're going to start dumping these companies and they're going to put money into Apple. There's also still $6 trillion or $7 trillion on the sidelines that is going to be coming into. So this should rip even more. So if you're just watching this video today, well, by the time you watch it, it's July 3rd. If you're watching, bro, go get some Apple shares, or you might want to do long dated options, because we're going to hit 221 to 224 in the next week or so. Okay. And you can make the same, like my original 210 contracts went 700%. So they're currently up 700%. So you can possibly get 220 contracts that are August 15th expiration, 225 contracts August 15th, around August 15th expiration, and you can go up 300, 400, 1,000% in the next week or two. All right. But yeah, this was all the reasons to get into this play, because it was kind of beat down. It was in a demand area of demand, the demand zone. And then we had a breakout. And we had very little risk to reward. So this was our risk to reward here. If you draw your risk to reward, it's 5.29 there. All right. So just wanted to kind of share that play, how we took it in the Discord, why we took it. Also, if you want to join the Discord, you don't have to pay anything. 3-day free trial. Link is in the bio. And then if you do get anything out of it, if you go through the different sections, you're gonna be like, holy moly. And then I go live every night for 2 hours. We're live in the morning trading. We post like the latest and greatest stuff. And then there's people in there. One person made 100K in a week, and then others are making quite a bit of money. They're kind of getting like me. So anyways, if you want to join, risk-free, link in the bio. And if this was helpful, drop a thumbs up, like, share, comment, whatever. If you want to see more videos like this, comment like, hey, I want to see more videos like this, break down how you get into plays, and then we could do that. But if not, then I'm just going to keep posting what I feel like posting, which is usually like mindset stuff, fitness stuff, and then a little bit of stock stuff. I feel like I post too much stock stuff, and it's not that serious. You just get into plays, you see stuff, and you make money. Anyways, your boy Mr. Fit to Flourish, and I am outie. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.